The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the November 5th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstances of what the bulls and the bears, the buyers and the sellers are communicating to you and I as of 1 o'clock in the afternoon here on this wonderful Thursday. And what I want you to know most importantly is that I'm grateful for your presence here. Now, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. Internationally, 727-445-1044. Would absolutely love to field your question, assist you. Remember, 4 eyes are better than 2, so we can take a look at both sides of any trade out there on this terrific Thursday. Of course, this is Tiger Financials Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 14 points at 17,882. The S&P is up, it's flat, basically, at 2102. NASDAQ Composite down 12 points, 5130 is what it's trading at. Russell 2000 is flat out here. She's trading at 1190. Gold is flat. Boy, a lot of flatness in the market. Let's go barefoot water skiing. That's what you do when it is flat out there. When you've got, because otherwise you don't want to be barefoot water skiing when you've got some wake out there. Let's go do that. Silver, we'll call it flat. It's back 4 pennies, trading at $15. Light sweet crude off 33 cents. Movers to the upside out here. E plus Inc. Maybe it's a buyout, maybe it's earnings. I don't know. It's up 25%, up 21 bucks. Ralph Lauren Polo, that's up 19 bucks. USANA Health, which was a dog yesterday, it's out of the doghouse. It's up 14%. Maybe we'll take a look at that if we have some time. I'm sure we'll have time. You just got to remind me to do it. Amazon is up 2%. That's up about 13 bucks. Mercado Libre, a name we haven't seen for a long time. That's up 10 bucks. Fleet Core Technologies up about 12 to the downside. Bluebird Biotech, that's off 20 bucks. Straight Path Communications, taking a straight path to the downside, off 40% with 3.7 million shares. Valiant Pharmaceuticals, that's down another 13%, up 12 bucks out there. So let's go ahead and get this party started out here. Where do you want to begin? Where do you want to begin? Where should we begin? Where should we begin? Let's begin by taking a look at. Let's go look at what we've done thus far. Somebody already put their hand up. They said go take a look at the IBB. We'll do that. We will do that. Let's do that now. Let's do that. Which is no better time than the present. Why put off, what we can do right now till tomorrow? It doesn't make a whole lot of sense, right? So let's go take a look at the IBB out here. Let's go ahead and put our TAS market profiles on the system. What do we know about the IBB? Well, number one, as we take a look at this IBB chart. In fact, let's clean it up first. Always easier to come with a clean palette, right? If we come with a clean palette, that makes things very helpful to us. So we can always add these things back in. Where the heck are my retracement tool? Oh, there we go. Okay. Couldn't see that box. So here's our clean palette with regard to the IBB. And now what you and I want to do is we want to be interior decorators, chart decorators out here to try to identify patterns. So one of the first things that you and I can take a look at with regard to the IBB, one of the things that we do know is that it continues to trade. This line wasn't on the chart before, but if we take a look at an August 24th swing point, the low of which has not been tested, close, but no cigar out there, the high of which is of August 24th, which was 340.23. We have seen here where that now is a level of resistance. When you trade inside a swing point, volume or not, and the volume on that swing point wasn't too bad, 4.8 million shares out there. but it hasn't really been able to bust through this level. Now, that's the swing point. We had that downdraft as well. That took place on September 21st. So this 340.23 level is a fairly significant area of resistance. Yeah, after August 24th, we did see price move up into the September 17th area. But what that really allows you and I to do is go ahead and put together a price channel. Now, here's a price channel. Just take a look at the body of the candle. So in one sense, what I just communicated to you, when we take a look at swing points out here, you left them on the floor. I don't think that was meant for me. But in any event, sorry about that. Multitasking here, and I think that was a bad multitask on my part. Retracement. So there you go. Now, if we take a look, it was meant for me. I just didn't catch the humor in it. My apology. My mind just apparently it's not that quick today. But look, first thing that we talked about was this August 24th swing point, and that we haven't cracked it, the IBB hasn't cracked it to the upside. Of course, what we can also look at, so the second decoration that's on our chart here is this descending price channel. Now, what we know about the descending price channel is that when price is contained within it, you should expect price to continue to move lower. Now, what took place a couple of days ago, this is on Monday, we saw a nice wide-ranging bar that met that 340 level with resistance, right? Volume on that move was 2 million shares. So nothing like it had huge volume or anything like that to the upside. Then 2 more days of testing that area. Earlier today, we can see that price had broken back inside the price channel. Looks to me, or had looked to me, like, hey, this breakout, this potential breakout message was a failure. You get back inside the channel, it's like getting back inside the trend. The trend is your friend. That says the IBB would be going south. Now, we won't really know till the end of the day out here. But what it also has done, as we speak at 113, prices come back and it's tested that channel line. It's actually communicating to you and I that it wants to bust out of there. And if it closes back inside, the message is very clear. It says, I want to go back and revisit the bottom out there. So that's how I would take a look at it. If we take a look at our TAS market profiles, we can go ahead and get rid of the channel. Well, no, let's leave the channel line up here. Let's get rid of that horizontal line, though. We can see that price today, in essence, came back and has tested and has held the weekly TAS market profile high. So that's an important level of support. That price, by the way, is 326.04. So here's the message. Today, if you were to see a close below 326.04, you're going to be back inside the price channel. You're going to be back below a weekly weekly level of resistance. Old resistance should now become new. Old support should become new resistance. Yeah, you thought I almost screwed that up, didn't you? Almost did screw it up. So that's the number I think to be watching inside the IBB. Anything other than that, you might have something that's a little bit neutral to bullish. Neutral to bullish because, it's held a level of support out there. So that's how I would take a look at the IBB, the biotech sector inside of the NASDAQ. That's what to be watching for today, in my opinion. Now, I was going to go take a look at, and I forget what the heck I was going to go take a look at. No, I don't know. But let's go take a look at our summation index. The summation index for the New York Stock Exchange, NASDAQ Composite, and Dow. Earlier in the day, the NYSE, about an hour, 2 hours ago, had gotten into the negative zone, had gotten below zero, and so too did the Dow out here. Now, that doesn't mean that we won't go back there. What I can say is, look, if we go back to the lows of today, then what you're likely to see is a failure of the bulls to keep the ball, to hold the ball today inside the New York Stock Exchange and the Dow. What that also would tell me is most likely we'll see the IBB fail and it'll get back below those levels that we took a look at. However, if we take a look at the market, we're ending right here at 115. What we would do is we would chalk one up to the bulls again because they held their defense. They held their zone. The bears were unable to break through their barrier of that zero line out here. Now, take a look at the S&P 500. Let's go take a look at it. I'll show you something that's unique out here. Let me teach you something today. Let me try to teach you. Now, many of you already may know this, and so if you know this, well, then it's a lesson that you ought to pass on to somebody else out here. Because there is nothing like learning something new each day. I'll just leave it like it is. Back here in the S&P 500, we take a look at the lows back here. Now, it's a daily chart that you and I are looking at. Back in July 8, 2015, we can see that there was a nice little rising trend line out here. And to the downside, beginning with July 20th out here, we saw a trend to the downside. That created a nice little cone. That nice little, if you like get smart, like I did, you have that, they called it the cone of silence, right? Where the chief and Smart and others, I guess, might get in there. Well, the cone of silence when we take a look at a stock chart out here is where we can get down where price can move into that apex. Remember that apex, the body of the candle is the essence of price out here. The wicks are nothing more than extreme emotion. It's a temper tantrum for the session that you're taking a look at. So we really use the bodies to really draw and really get a feel for what's going on here. And you can see inside that cone of silence, it was broken. And it was broken big time to the downside back on August 20th. And then we saw the move all the way down to those August 24th lows out there. This is the S&P 500 we're looking at. What the S&P 500 actually did today is when you get to that apex, oftentimes when you break an apex, price doesn't make it all the way back up there. In this case here, the S&P 500 most definitely did. In fact, back on this trading session right here, which was October 30th, you can see price made it all the way back up to that apex, formed a little key reversal session out there. And quite frankly, I figured you'd come back up to an old level of resistance. It was curtains for the S&P 500. However, I was absolutely positively wrong, because the very next day, which was this past Monday, the S&P decided to take off without me. Now, my system had crashed on Friday afternoon after the show out there, so I had to rebuild charts. And one of the charts I forgot to rebuild inside the ES Mini was to identify where the perigee lunar phase was at. Much to my chagrin, the next day, or maybe it was yesterday, as I was completing the rebuild of those charts, Sunday night when price pulled back, it pulled right back to a level of support. And then it just boinged. It just simply took off after that. Well, what's taken place today, and I say this is kind of a key level today, because earlier in the day, around 10:30, 11 o'clock or so, we saw price actually get back below that area. Now, you're going to say, where's that area? I can't give you the exact number because, the apex is somewhat, it's right around the 2,094 level. So let's just say today, if you see a close below 2,094, don't know whether we will, then a level of support inside the S&P 500 will have failed out there. So whenever you're drawing those little triangles out there, always make sure that you go ahead and you take that line right at that apex, go ahead and cross, and use that as a barrier of support and pièce de résistance. Speaking of pièce de résistance, let's go out to Martinez, California, and speak with Brent. Brent, thanks for calling. Thanks for holding. How are you doing this morning?
Doing well, Steve. How are you today?
Excellent. Thanks so much for asking. And with Brett, we're going to take a look at natural gas, UNG. Are you long natural gas?
I am. I have the January 2016 $9 calls on it.
Okay, excellent. And so how can I assist you?
I just was hoping you could take a look at it and see what some of the parameters would potentially be on the upside. Looks like we're having a decent move today.
You're having a very nice move today. It's the second nice move in the last 5 trading sessions out here. Can you hold on through the break, and then we'll go take a look at natural gas. We'll look at it on a couple of different time frames for you.
Yeah, absolutely.
All right. We'll be back with Brent in Martinez. We'll take a look at the UNG. That is the natural gas ETF. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We are on the line with Brent in Martinez, California. We're taking a look at the UNG. Brent is long the UNG. We're going to go ahead and punch it up on our chart right now. It's trading out at $9.97 out here. And we know about natural gas. Now, this is the ETF for natural gas. Natural gas has just simply gotten demolished. If we take a look at where, I mean, you can see here in just an absolute downtrend, really ever since back in February of 2014. Now, typically, what natural gas does is it tries to make some type of bottom late summer out here. However, in 2014, if we take a look at what UNG did and what natural gas did, it didn't make a buyable bottom, a tradable bottom, until October 27th. And today is November 5th out there. So knowing that, Brent, first thing, just simply seasonally speaking, know that it typically makes a bottom towards the end of September. It didn't this time. Last year was around October 27th. Today, if we take a look at when that bottom came in, I said 5 days ago, which was October 30th. I would almost say that from a seasonal standpoint, that sounds pretty good out there. So that's the first thing that you got going. And the second thing is that, you know, today, volume in it is 3.9 million shares. Now, 3.9 million shares is going into this little downdraft here from the trading day. I'm just looking at the UNG with 13 million shares. So we're bouncing up. It's light in the loafers. That doesn't mean that it won't move higher. It's just not what you would prefer, what I would prefer out here. But at a minimum, this should get at least a huge oversold rally out here. Now, the first key inside UNG, now what I'm going to do is I'm going to put this other page up on my screen because I know you follow us on Tiger TV. And the top portion of my chart is the current natural gas contract. And so the numbers that show up on it are really what we would be using to monitor the trade, because it's different than what we're going to take a look at on the bottom portion of my chart, which is UNG. Those numbers specifically, if we take a look at our TAS market profiles, our natural highway of where buyers and sellers are, and when you can break above resistance, that is a very positive thing. And in the case of the contract, if we didn't know the correlation between the two, I might say to you, hey, what the UNG needs to do is break above $10.15. Maybe I already said that. But I would then say, wrong. That's not what it needs to do. We don't even have to worry about the $10.15, because what the current contract, what the December contract did today, or has done thus far, I don't know what it's going to look like at the end of the electronic closeout here, but what it has done and what you want to see it do is simply stay above the price level of $2 and where is it? Natural gas, where's the daily top of the box? That's very weird. Give me a moment here. Because the number, why isn't it showing up on? I don't know what's wrong with my chart. Let me do this. I was trying to put both of them on the screen up here for you. So let me go back to the actual, and this, because this way I'll know I'll get it correct for you. So let's see here what shows up on the screen. Come on. That's just going to take me a moment here, Brent, for the profiles to pop up on the screen. But what you and I want to see is, where is that resistance, that daily resistance inside of natural gas? Oh, okay. Yeah, there was something wrong with the other chart I created. So here is the deal. What you're really looking for is pay attention to what natural gas does when it gets up to the $2.43 level up there, because that is on the daily chart. That is the daily profile high. In the way that this current box is set up, which began, looks like on Tuesday, this really doesn't tell us that anybody's in control, because that point of control, which is where it's trading above right now, $2.33, it's really right in the middle of the top and the bottom. So it's not as if buyers or sellers have any advantage right here. So you really want to see this thing get above $2.43 when I take a look at it that way. What am I missing in the in my review so far that you've taken a look at? So we took a look at seasonally. We know what it did last year. It's really in line with what it did this year as well. What else are you looking at that I haven't seen?
The question I would have is, the 243, is that based on the most active contract or a continuous contract, or what do you
It's the active contract. It's the active contract. I think natural gas actually officially rolled over into the December contract. Was it this week? Last week? I've had it kind of active here. I've had it up on my screen probably since the middle of October, but I think it rolled over within the past week or so. But this is the December contract. This is the
that's the one I'm following. Yeah, the Z contract.
Yeah. Yes, absolutely. Yeah. So it looks like $2.43. If you can clear that, then you've got a pretty decent ride to where. Probably the next thing that I would look at might just simply be a simple trend line. And the trend line that I would be looking at, I apologize, probably takes you up into about the $2.65 level.
All right, thank you very much, Steve.
Okay.
I really appreciate your help. I always do. And great talking to you again. Just have a great day, okay?
All righty, you too. That was Brent in Martinez, California. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow is up off about 5 points. Relatively flat markets out here. Let's go out to Nashua to Mike. Mike, thanks for calling. Thanks for holding. How are you doing this afternoon?
Hi, good. How are you doing, Steve?
Excellent. Thanks so much for asking. And you're calling about the ticker symbol NUGT, the ETF that tracks the gold miners. Is that the 200%, 300%, do you recall?
I think it's the 3X, yeah.
3X, okay. Tell me what you're doing with it, how I can help you.
I'd like to try to get into it.
Okay.
Buy it.
Go ahead.
Yeah, I would like to buy it. It looks like it's coming back to a breakout area.
So let's take a look at NUGT. Let me ask you this question first, a qualifying question. What is do you have a market posture for just the general market, for the S&P, Dow, so forth? What's your posture there before I answer that, before I answer your question?
I don't have one. I'm not sure what you mean by a posture.
Bullish, bearish, neutral.
Oh. Right now I'm neutral. I had been trying to short the market, but I think that after the jobs number tomorrow, I think the market's going to go up more. So
okay. So if you believe that the market is going to go up more, then taking a look at the reason why I wanted to ask what your posture was is because it would help me to to take that piece of information and say, okay, here's what you can anticipate. Because we took, I don't know if you caught yesterday's show, but one of the things that we did yesterday specifically was we took a look at the gold miners out there, and we compared that to other points in time when the S&P 500, I believe, is what we benchmarked it against. And you can probably catch the archive of that show on Channel 9 on TigerTV. Okay. Was that what we saw was that if the market was going south, so you've mentioned you've tried to short it a few times, mining equities were not going to be able to fight that trend. Even though they've held up really well out here, they have not been able to historically really be able to fight that trend. However, because you believe that the market is going to move higher, then I would say, okay, let's go take a look at Nugget. Is it coming back to a breakout area? How is it doing that volume-wise and so forth? So that way, you know, I'm utilizing your thought process. And I'll also give you mine, but I wanted to make sure I understood. Now, in the case of the NUGT, if we just looked at this on its own, 8.9 million shares today, and that 8.9 million shares, I'm going to turn off these market profiles here. Are you watching this on Tiger TV by any chance?
No, I can't. No.
No. Okay, no problem. So what I'm going to do first is I'm going to benchmark. What sticks out to me is the trading session from September 11th. And the reason that it sticks out to me is because prices pulled back so that it's almost made a 100% move of a move. And that's priced at the NUGT on the high of September 11th was 27.40. And that's really our swing point. And I say that because, you know, it's already made more than a 0.786 retracement from the low up to the high out there. And when you do that, typically you come all the way back into that swing point. Now, that swing point from September 11th has volume of only 5.7 million shares. So what this actually communicates to me is today is not the day to buy. That doesn't mean something can't change, you know, in 3 minutes or 4 minutes from now. But just technically speaking, when you like to see an equity pulling back, whether it's to an area where it broke out with volume or into a swing point, which in this case, that's what it's doing, is pointing into a swing point. You like to see it doing less than that volume. And it's only 130. We've only been trading for 4 hours. So there's some pretty mean volume inside of the NUGT out here. And that says that if you're going to buy it, if you're going to time this with tomorrow, maybe the buy is at 27.40 if the market turns around and gold moves higher, and so do the miners out here. Otherwise, you're really looking for maybe when you take a look at NUGT around the 23.60 area. So as I take a look at this, that's what that shows me. The one additional tool that we can put up out here on our screen is our daily and weekly profiles. Now, we're only interested in the daily right now, and that says that as well, this thing is likely to go at least test 27.70. So I think that 27.40 really becomes your next place to look at for entering the NUGT. And I would also say that's assuming that the market is also going to motor on higher. Now, I do anticipate that gold is going to take a timeout here. I don't know that it's going to find a bottom. I just anticipate that it's going to take a timeout. And if it takes a timeout, if I'm right about that, if it takes a timeout, it's likely not to move much, and nor would the miners. However, I will say that if the market moves south, it'll take the miners with it. So does that assist you in the and so what you know, if I gave you that analysis, what questions have I posed for you that you didn't have when you first called?
No, I think that clears things up. I subscribe to your newsletter as well, so I will watch for that as well. If you buy it for gold.
So in the newsletter, so what we both know inside the newsletter was that when we exited our mining position, part of that was due to just simply some stop management out there. And in the meantime, what we know is that we've seen the commercial traders just absolutely move to large net short positions. And this was as of the prior Tuesday's data. I don't think that they've taken their foot off of the accelerator that much. And I think with regard to what's going on inside of the mining sector itself, gold specifically, silver specifically, I think we have to be really cautious here.
Yeah, okay.
Okay?
All right, thank you, Steve.
Hey, thanks so much for calling. That was Mike in Nashville. And we were taking a look at there, folks, was the Nugget. If we take a look at the GDX, just to make sure, that's the 1-to-1 ETF for the gold miner vectors. Now, this doesn't, let's take a look at it. Now, at swing point, you can see where the Nugget is already making its way back to September 11th. The GDX is not. So let's just take a look at the GDX here. And in the case of the GDX, the September 11 swing point, the high out here is $13.34. And we're only at 14.10. Now, the volume on that day was 63 million shares. Today, you've done 35 million shares, and 35 million shares is coming back against 98 million. So that's interesting because this is a different chart than what Mike and I were looking at when we took a look at the NUGT. So in the case of the GDX, it is pulling back into an area where it broke out with lighter volume, because there's no way it's going to do twice the volume. Even if it does twice the volume today at 70 million, that's still less than the 98 million out here. But my take is still the same. You've got to, this thing, the GDX is most likely going to come back to 1357 at a minimum at this stage of the game. And then if it does that, that says that it can go test that swing point from September 11th. And what we really just need to do is take a look at maybe 4 or 5 equities inside of the mining sector out there. One of those that we could take a look at would be Agnico Eagle. One of the stronger, you take a look at Agnico Eagle, Franco-Nevada, maybe Randgold. Let's just take a look at those 3. So let's do that for Mike, especially he's a subscriber. So, he's looking at some trades as well on his own. I want to take a look at. And what we know about Agnico Eagle is today it busted loose to the downside. So one of the equities that has held up the most through this nasty decline that we've seen in gold, today just simply gave it loose. And it gave it loose, and the market is basically flat. Now, volume-wise, this is pulling back today with 2.4 million shares into the trading session that did about 5.3 million on October the 2nd. But nonetheless, this thing broke a trend. It broke through its TAS market profile. If we take a look at retracements just to get a feel for where it is at, and maybe it's the strong ones, the strong hands out here that are now starting to tell us what's really unfolding. And so it looks to me like Agnico Eagle probably headed to at least 24.84 out there, at a minimum. Now, let me put the weekly profiles out here, see if it has busted through that. Let's turn those on as well. Those are going to show up in green. So it says on the weekly profiles that 25.95 becomes that do or die. If we see it close below 25.95, the weekly profile low, we're looking at 24.84, 23.25 inside Agnico Eagle. I mentioned Franco-Nevada, FNV. Let's take a look at it, see if this thing also looks like today has given loose. It is shaken loose. It is trading now below a swing point, and it's doing that with volume. So that's a bad scene. This could actually be an A to B equals CD to the downside. If that's the case, and we take a look at Franco-Nevada, your A point is out here from October 28th. Your B point is November 3rd. Your C point was yesterday. This says Franco-Nevada would head back to about the 43.21 level. So it's already broken a B point. As long as it closes below 48.95 today, it's done it with volume. That says one of the strong hands is going to come back and at least try to make a Gartley buy pattern out there. Let's take a look at Randgold, GOLD out here. So we're trying to take a look at the strong ones. Ooh, this also does not look good. So here's one of the reasons why when Mike and I looked at the NUGT, we've seen the volume, I think, that we have seen. So this hasn't broken a B point. This simply is right now coming back to its daily profile low out here. It's trading right on it, basically. 66.49 is the number it's trading at. No, 62.44 is the number. It's trading at 62.34. Volume today, 831,000 shares. Now, that's not too bad considering it's coming into the breakout from October 2nd with 1.4. But basically, if this thing closes below that 62.44 level, there's actually nothing to stop it from getting back to 58.32, 55.60. Barrick Gold, ABX, let's take a look at it. Barrick Gold actually, which is one of the weaker stocks, is looking okay today. But the reality is it is also, trading below a consolidation level out here. It's trading below its daily profile. So $7 is written in the cards here for Barrick Gold, ABX. So that's what's going on inside the miners out here. And they're starting to, so the strong ones are starting to crack. That is not a good scene out here, and gold really hasn't done anything to speak of. Okay, so that takes care of the commodities space, I suppose. What else can we take a look at out here? I'm just trying to figure out what is it that makes the most sense for me to do for you guys out there. Let's take a look at perhaps the more bearish patterns that are in the marketplace, just to get a feel for, and we're going to take a look at both sides. One of the things I get, and thank you to each of you that send me emails. I really do appreciate it. And look, and if you send me an email and I don't respond to you, it's gotten into my junk box, and that junk box doesn't stay on my system too long. In this day and age, with all the crap that's out there in emails and so forth. So if you sent me an email and I haven't responded, even just to say thank you, please send me another email. Respond somehow, because that is not how I conduct business out here. But some of the emails that I get, are from folks that I talk about that. It's really important for you and I to find the gift in every set of circumstances. And look, I don't know about your life. I have not lived a life where things were fed to me on a silver platter. So I can give you stories of hurt and pain. And so I would never ask you to do anything that I can't do. And here's the thing that I know. People say, well, how do you do it? Okay, how do you find the gift in every set of circumstance? And what I would tell you is this. Think of it, a lot of times metaphors are really very key for you and I. Analogies are really key for you and I. When we take a look at these stock charts, one of the things I really practice at the most is trying to link the known to the unknown. This is the quickest way to be able to learn anything. And if I were going to tell you, how can you find the gift in every set of circumstances? What I would do is I would use an analogy or a metaphor of bread. Now, Nico probably doesn't like, but he probably likes bread too. Who doesn't like bread out there? I mean, there are all kinds of varieties of bread. Some people like, that Texas toast, nice garlic butter. I mean, you maybe you're having a steak or whatever it is you're having, but who doesn't like, and I don't even know how they came up with Texas toast. Maybe because it's big, maybe because it's wide. But who does? Some people like pumpernickel. You think it's more pure out there. If you've ever gone over to Europe, you're going to eat mostly dark type breads out there, which are terrific. But put some good butter on that. Some people just simply like a sourdough, or some of you, if you're from Detroit. I don't know if this bread here was just in Detroit or made it around the world, but Wonder Bread. Hey, what a great name for a bread out there. Was classic white. Probably was the thing that was not good for us as kids out there. But here's the deal with regard to how you find the gift in every set of circumstances. When it comes to bread, I don't care how you slice it. I don't care how thin, how thick, there's always two sides. When it comes to trading and investing, there's always two sides of the trade. When it comes to something negative that comes into your life, there's always two sides out there. So even though it's that negative one that really is that whoosh that comes inside us, just change your state. That's pretty easy to do. If you're sitting down, stand up. If you're standing up, don't sit down. Put your chest back and walk and take some deep. But change your physical state out there, and then figure out the opposite of what it is that you just believed out there, because that is really it's called reframing and elevating. You just got to reframe and elevate the subject. But as I say, there's always two sides to everything. That's how this market works. Somebody can be bullish, somebody can be bearish. You've got to have both out there. Otherwise, the market just simply falls apart. Now, with regard to, something to pay attention to today, tomorrow, I don't know how today ends out here, but if we take a look at the NASDAQ right now, the NQ, what we can see out here is yesterday with the move inside the NQ, it got to a slightly higher high, did it with a little doji candle. If we just simply go ahead and we expand that, you can see that the open and close were the same. And if you're gonna use these candles, I suggest that you truly use them properly. And a real doji candle, the open and close are basically virtually the same. There can be a smidgen out there, but it can only be a smidgen difference in price. And when you have a doji and it shows up near resistance, and that's resistance, the 1 to 1.272A to B equals CD, and you had price moving higher with less relative strength, any close lower, the Japanese would say, the leaves are falling off the trees. And that might be what we have in place right now. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let falling markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Still pretty flattish style market out here. It's all going to be about the close today. If we close down towards the current session lows of the day, that ends up sending a signal of at least a short-term pullback that has begun out here. Of course, we've got to get through Jobs Friday. Last Jobs Friday, we saw a swoosh, a Nike swoosh to the downside, and that's at the bottom. That was September 29th. I can't tell you whether the market is going to set the high or the low or something neutral out there. But we'll use today's action as the first precursor. If it's flat, well, then it's neutral and hasn't really provided us with a whole lot of information. Had a request to go take a look at Texas T light sweet crude out here. If we take a look at the current December contract, we're trading at 45.70. The idea is to look for a buy out here. We had a Gartley buy pattern that set up inside of natural gas back on the trading day of October 27. That's where, not natural gas, light sweet crude, my apologies. That's where it completed a 1-to-1 A to B equals CD to the downside. It was, from a retracement standpoint, let's go see, looks like it was a little bit in between the 0.618 and 0.786. That's fine. It's the A to B equals CD pattern that was key. course, the very next trading session, it didn't let you in. You had to get in just simply because of an A to B equals CD price moving down to a weekly TAS market profile low. Now, we've seen a move off of that. The question becomes, is this just simply a retracement of that last move? Are we making an A to B equals CD to the upside? Well, if we are out here, what we can see is the price of light sweet crude has moved back below its 0.382 retracement, which priced at 46.15. That's off of the move from the low out here on the trading day of October 27th to the high of November the 3rd, 2 days ago. So the idea is this investor trader would like to find a buy. I would say if this, in fact, is just setting up the next A to B equals CD pattern, then your buy area would be right around 44.79. 44.79 is your 0.618 retracement. 44.71 is your daily point of control. If price can hold that level, then what you'd be looking at, then you could put a relatively tight stop, because if you see price really move below that, you're looking at coming back and testing the swing point from the trading day of October 27th, the top of which is only 43.91 out there. If we just simply turn off profiles and look at everything else out here, let's do that. One of the things that certainly sticks out to you and I is just this sideways consolidation. That sideways consolidation, if we just look at horizontal lines out here, that's if they'll go ahead and post on my chart, is really between that and that. There's your consolidation, which is really between 43.50 and 50.89. So, your other option is really to wait for a test of the top of that October 27th. Maybe what you do is you go ahead and you take this. Now, it's not likely that you're going to see light sweet crude break above 51 bucks. Not that you can't. You really won't know until you see how price is moving up into the October 9th level of around 49.69. So you're in a consolidation. Quite frankly, the best buys in the consolidation are down towards the bottom. The best sells are up towards the top, because your stop is just simply on the other side, to close on the other side of that in order to take the trade. If the consolidation is broken, just like you and I, we took a look at those triangle patterns out there. We took a look at how when price is able to move into that cone of silence, you can use that level for a resistance and a support area. If a consolidation is broken, then what we look for is the move to be equal to or greater than the actual consolidation level. That becomes our measured move in the trade. So, folks, have a terrific Thursday. Stay tuned, because our man David White is going to be up next. Maybe he'll get these markets rocking and rolling one way or the other. Maybe not. Maybe we'll just leave it to the master mechanic, Tom O'Brien. He'll be on from 3 to 5, and Andy Heck from 5 to 6. Have a great Thursday. Look forward to seeing you on fantastic and fabulous Friday. Thanks, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.